Welcome back to the channel, everybody. I appreciate you stopping by for today's presentation. I've got to ask right away, like the, like the video, subscribe to the channel, and leave a comment below on what you think about today's presentation. Um, so what is this magic tool that you can put on your chart and pretty much instantly make you a better trader? It will tell you right now, it's not an indicator, okay? Um, I have one indicator on my chart. I'll explain it to you momentarily. So let's just jump right into it. Let's get over to the charts. So I use a 15-minute chart and a 2-minute chart for my trading. Um, that's actually on the 4 hour, but I use a 15-minute chart. There we go. And a 2-minute chart. And the only indicator I have on my chart is this 9 EMA or SMA, whichever one you want to use. The 9, especially on the smaller time frames, is a fantastic tool to show a trend and also give you an indication that there's going to be a pullback, okay, um, or a complete reversal. All right. So, and we'll get into that later. So, a dealing range. What is it? How do we find it? And how do we put it on our charts? Well, first off, we have to go to the 4 hour chart, okay, because this is where I find my dealing ranges. And all I'm looking for are swing highs and swing lows. Okay. And if you don't know what that is, a swing low is any candle where the candle on either side of it is higher than the low of that candle. Okay. So this is a swing low. All right. Swing high, just the opposite. Any candle's high where the candle on either side of it is lower than it. That includes the wicks. Okay. Um, so this is a swing high. Okay. So as I'm going along during the day, I'm checking in with my 4 hour chart and I'm just marking out uh, swing highs and swing lows, right? Okay. And so what I notice when we get down into this area is that we come down and we sweep this swing low and then we make a new swing low below it. Now at this point, I'm kind of looking when price starts pulling back, I'm kind of looking for something in particular. Now I'm already going to have a dealing range on at this point from a previous dealing range, but I may need to adjust that and make a new dealing range if this particular thing happens. And what I'm looking for, I'm looking for it to go break a swing high. So I want it to take a swing low and then break above a previous swing high. This swing high is not the one I'm looking for because this was only the push down to sweep this liquidity. We could come up and break above this swing high and roll over and fall back down and not break structure. Okay. It's internal structure, but this is going to be external structure. Okay. So this is the swing high I'm looking for price to come and break. All right. So when that happens, I can take off this swing point and this swing point, and we actually close above that swing point on this 4 hour candle. Now I have a new dealing range. Okay. All I have to do is wait for a new swing high to be made. Okay. And on this candle right here, this little doji candle here, once this candle closes, we've made a new swing high. And I can move this and just go ahead and take it off the charts for now. Just remember that any unbroken swing high is going to be marked out. So these would be marked out until we break them. Okay. I watch those areas as well. But we have a swing high and we have a sweep of a swing low. So we now have a new dealing range. So how do I draw my dealing range on the chart? I take a Fibonacci retracement tool, okay, and I put it at the low here and take it to the new swing high, which was made right there. Okay. Now, this price action hasn't happened yet. It's there, but in real time, this is what I'm doing. Okay. So I now have my, excuse me, my dealing range level. Okay. Now, now I know that I'm in a long bias position because I've made a new dealing range. We should, at this point, continue higher. We're going to have pullbacks. We're going to have to deal with it. But to stay bullish, any pullback on this 4-hour chart should not break below the 25% level. And as you can see, we pulled back a little here. We went up, pulled into this fair value gap, pushed up, and made a new swing high. Okay, so I'm going to move that up there. Okay, so I continue expanding my dealing range until I see a break below the 25%, and then the mind shifts a little bit, and I'll show you that in a minute. But as of real time, with none of these starting at this candle, none of these candles have been printed. Once this down candle prints and closes, I have a new swing high. I move my dealing range up and I see what happens. Well, what I tell you about the 25% level, I don't like to see anything break the 25% level because one of two things are going to happen here. We may go down to 50% and go back up because price likes equilibrium, right? Sure. But that's going to change something in my dealing range if that happens. To get down to 50%, majority of the time, we're going to have to break a swing low, okay? Which we did. When we broke the 25% level of this dealing range, we also went and took out this swing low. We didn't make it to 50% because we had this fair value gap here. And that pretty well held up and we went higher and we got back above the 25% level. Now, once we're back above the 25% level, again, I have to watch on the 4-hour, and I'm trading in between all this. We'll get to the lower time frames in a minute. Um, but we go up and we make a new swing high, okay? But not only did we make a new swing high, what did we do? Well, if we're marking out our swing highs, we can very easily tell what just happened, okay? We came down after making a new dealing range here, okay? We came down and we swept this swing low, made a new swing low, and then went up and swept not this swing high, which is internal high. We swept the external high. So what do we have? We have a new dealing range. Okay. And when we get to the lower time frames, you'll understand how I could have traded this dealing range as it was moving up. Okay. Okay. So now we're at this swing high here. Oh, let me just take that off. Now we are at this swing high. We get a one candle pullback on the end of a Friday, and then we gap up on the new week opening gap. Okay. And we make a new swing high. So we move it up. Okay. Oh, sorry. I forgot to do something. Let me just take all of these off. You understand the concept of keeping track of your swing highs and lows so that you know what this does. I said, we swept the low, we took out a previous high, so we have a new dealing range. So I need to move the low of my dealing range up to this swing point here. And I am still continuing to move my dealing range up as we make new swing highs. Okay. again until we break back below the 25%. And then I have to see if we get confirmation that we're going to go sell side for me to change my bias from long trades to short trades. Okay. So the pullback here from this swing high does not break the 25%, and we go up and we make a new swing high. So again, adjusting my dealing range. Okay. We come down, we tag the 25%, and we reject off of it. We have a bullish engulfing candle that happens, and I am actually looking for longs from here. The moment we break the color, the body of this down 4 hour candle, I'm looking to enter longs, okay, and trade this back up to the previous 4 hour swing high, okay. Maybe not all in one trade, but that's my target, okay. And we get there and we break it and we make a new swing high, okay. After that, we come down and look what happens. We close below the 25% mark. Now I've got to, I'm still bullish. This could possibly go back up and make all-time highs, but I'm watching both sides of the market now on the 15 minute. All right. Because I know we swept the swing low, so there should be some kind of a pullback. We go and sweep that swing low again, and then we have this massive pullback. Okay. Now, what I'm looking for in these areas are fair value gaps. Okay. And I'm looking for those fair value gaps to hold to then go and take continuation. Well, as you can see, we had a downward fair value gap here. Okay. So that gave us a bearish signature because we also inverted this bullish gap. Okay. But I have a problem with this fair value gap that's keeping me watching both sides of the market for a little while, maybe even a full day without trading, because this candle closed back above the 25% level. That makes me suspicious. Okay. And the only thing that goes through my mind,
Hold up. Wait a minute. Something ain't right.
so we have to pay close attention here. Now, any given 4 hour candle is a big enough range for us to make a trade in on an intraday basis. But at this point, when we closed below and then closed back above, I'm not exactly sure that we're going to go higher because we have the fair value gap. I'm also not exactly sure that we're going to go lower because we've reclaimed a level that I'm looking to hold to switch my bias. Okay. And sure enough, we do come back below, but I'm still not convinced here. All right. The fair value gap did hold. We closed below. And when this fair value gap holds, I'm absolutely looking for shorts, especially once we get back below the 25% DRT level. Okay. Take a trade. Next 4 hour candle, what does it do? It starts to go down and boom, bullish engulfing candle again. We go and test the all-time highs, but we don't sweep the high. Now here is where I get my confirmation that we're actually going sell side on the market, okay? And where I will switch to looking 99% short trades, okay? After we test the high, we get the huge wick down, and then we fair value gap again through the 25% level on the 4 hour. But this time, we have all sell side candles, all blue candles, which means all that pressure is sell side. This had some buy side at the bottom before making the gap. Okay. But now we have all sell side pressure creating a 4 hour fair value gap where the third candle in the gap does not close back above the 25% level. Now I'm looking for short trades. Majority of my trades are going to be short trades. Okay. And as you can see, we tried to push back up, but never could close back above that 25% level. So any push up on an hourly candle or a 15-minute, what looks like might be an uptrend, I'm very cautious of and waiting for us to hit that 25% level to see what happens and try to trade that pullback when it gets below the 25% level because my bias is now short and I can see that this fair value gap is holding. In fact, we don't even want to close inside the gap. We push up into it, but we're closing outside the gap. Okay. This one may have closed inside just a touch. So now I am short bias. I can find trades from the 25% level down to equilibrium. Okay. And reassess from there. Reassess at every level. Now, I eventually did um, take this trade when we came back and swept the 4-hour low that actually created the dealing range. Okay, and there was good trades going up as well off of that level. But you can see how these are starting to come together. Now, here's another key, and this is going to help you on the lower time frame, especially the 15-minute chart. So let's go to the trading chart, right? Okay. And let's get to the 15-minute and let's get back to all the way up here. Okay. So this was our retest of all-time highs and we failed and we broke back below the 25. Okay. And then we pushed up and absolutely rejected it there. Then we came here, rejected. And you can see the times of days. This is the Asia session. We come into New York and we push up and we swipe this high but we reject the 25% level. Now, once that happens and we invert this little gap that was made here on the 15-minute, okay, so on the 11 o'clock candle, we invert this fair value gap. I am now looking for shorts on my 2-minute time frame. Okay, but what's going to help me here, especially on the lower time frames, is I have another fib retracement tool. Actually, this DRT should be my quads. What's it? No, dummy. This one. This should be my quads, which is going to be this color here. Okay. And then I'm going to go pick up my quad. Okay. And all I do is break down the major 4-hour levels, you guessed it, into smaller quadrants. Now I'm just going to scroll through time all the way back down to the 0 uh, or 50% or 0 DRT levels, okay? And I want you to watch these lines. Actually, I need to draw another set because I'm going to put quads from 50% down to 75%, and then we'll just go from there, okay? Let me lock these in so I don't move anything by accident when I'm grabbing the charts, okay? Now I'm just going to scroll through time, and I want you to look at the quadrants within the quadrants and the quadrants themselves. And remember that I am trading fair value gaps. So I'm looking for my ignition of trades through the fair value gap system at levels. okay, and watching price action with that in mind. Okay? And then once I get that ignition on the 15-minute chart, then I move to my 2-minute chart. And again, I'm looking for fair value gaps to get retested and hold to continue on into another direction. Okay. And you can see we finally come back down. Once we break the 75 level, we come down and we break the bottom of the dealing range. Okay. And then we get a 600-point move back to the upside after swiping that low. But if you've noticed as I've been scrolling through this and you've been watching the green levels and the white levels, that these are acting as some fantastic support and resistance levels. And when there are fair value gaps made at these levels, and those fair value gaps get retested and hold, then right here, the 50% level of this quadrant between the 50% and the 75, this fair value gap was created and it held. That's a 10:15 and 10:30 candle. Boom. Okay. Bearish engulfing off of a fair value gap made at a DRT level. And you get another from that point on. Now, I typically will not wait all the way until this 15-minute candle closes. I'm going to be able to tell in the last 3 to 5 minutes of this candle that it is going to close below the body of this candle, and I can enter a trade in this area, okay, on my smaller time frame, with or without a fair value gap on the smaller time frame, okay. Um, Honestly, I would just be looking for us, on this retest, possibly we do wait for that to close, wait for the retest of the 25. If it happens, there's your trade. If it doesn't, so be it. You missed the trade. You'll catch another one because they'll be there. But if you entered at the close of this candle, now granted, you're going to have to put your stop if you're trading the 15-minute chart, which is why I trade the 2-minute chart. Um, you're going to have much wider stop losses on the 15-minute chart than you would like to have, unless you have a large account. Now, I typically use a 50-point stop, okay, with 5 micros, and I'm looking for a 100-point win. But if I were to enter this on the 15-minute chart, I know I've got a 100-point stop to get back up to this white candle, okay, where we had the bullish or the bearish engulfing afterwards. And we could always come back up and rebalance that, which it did perfectly, okay, so that it doesn't make a fair value gap at this level and then pushes back down. So knowing that if I wanted to enter on the bottom of this 15-minute candle, I know I would only be able to go in with 2 micros, half my less than half my normal size, to still maintain my risk parameters because my typical risk is 50 points. If I'm going to have to go higher than 50-point risk, I'm going to risk 100 points, okay? Because that needs to cover enough of an area. And it does with this candle, okay? It goes back a little bit above the 50% pullback of this big engulfing candle. So I know what my risk is there. And I'm looking for a 100-point move, okay? And you certainly get that, all right? So that would be a one-to-one trade. I don't like one-to-one trades, which is why I take them on the 2-minute chart. And I probably would have waited after the close of this, knowing it's a big bearish engulfing. It's going to have some kind of a pullback, and it actually pulls back, breaks, just barely breaks the 25% level of this quadrant, and then we get the pullback wick. The next one comes up, retest that again, but can't get above the 25% DRT. As soon as that one starts moving to the downside, I'm jumping in on a 2-minute chart, especially if I get a 2-minute fair value gap that gets retested and then continues down, holds and then continues down. and I'm trading uh, for a 100-point move. Okay, so that certainly would have been able to happen. Let's just say I get in somewhere around the top of that candle when it turns back blue, and I'm looking for 100 points. I don't have to wait very long, and I've probably got my 50-point stop at that point. Okay, because 50 points would cover the top of that 15-minute candle. Okay, so I get my 2 to 1. I make my $250, and I'm done for the day. Okay, so there you go. Now, there is a way that I use this tool on the 2-minute chart for trading. And I use it specifically on the 2-minute chart, its own dealing range. I don't use a dealing range off any other time frame. I use the 2-minute chart. And if you want to see me explain that and show some examples on that, there's going to be a video up here. Just click on that and head on over, and I'll show you how to get those really tight stop losses and perfect places to enter your trades and get your 2 to 1s on the YM. This can be done on any asset. You just have to figure out your risk parameters for that asset. I trade the YM. I know that I play with a 50 and a 100-point stop loss. Okay, that's my two. Those are the two trades I'll take. And I don't like taking the 100-point stop loss trades. If I miss a 2-minute move, but it looks good on the 15-minute, and I can get in that trade for a 100-point stop loss, I will. Hopefully, I'll find a place to add to the trade to get my other three contracts in. Um, and I only add to trades as they work in my favor. I only add to winners. I don't add and draw down 85% of the time. Okay. There are occasions. Trading cannot be yes or no. There are exceptions, rare exceptions, but there are exceptions to the rules. Okay. So I hope everybody enjoyed it. I'm going to keep this video under 30 minutes. If you've made it to the end, definitely click on the video on how to use the DRT levels on a 2-minute time frame to really narrow down your entries, get those tight stop losses, and make those bigger profits. Okay, that's where we move from uh, a 2 to 1 trade to the 4 to 1s, the 5 to 1s, the 8 to 1s. Okay, so hope to see you at the next video. Until then, everybody, stay blessed.